By the way, this is going to be really hard for me because you're in
Are you not taking me seriously? Do you want me to take my cow
No.
ears off?
No, because it's good like mental gymnastics to like to simultaneously take you seriously, but also you have a cow hat on. So it's
I'm very serious. This is serious business
serious cow
for me. Serious cow.
the most
Yes.
serious cow. Hi, Kelsey.
Hey, Zach.
Happy Halloween.
Happy Halloween to you, too. I love your costume.
Thank you. I'm, what am I?
Are you yourself?
I
Are you
guess
like a
I'm
more
myself.
formal version of yourself because you have a button up on?
Yeah. I'm, I tried to dress myself today is my costume.
I
What are
love
you?
that. I am a cow. Obviously. Well, hopefully that's obvious. I did take off the bottom half of the cow because I felt like since you're not really dressed up, I felt like it was a commitment, but I did want it to be just documented that I dressed up for remote work Halloween, and this is the perfect way to document it.
I was in a meeting with some other team members earlier today, and I won't name the person, but they were in a costume, and I thought it was one of those Google Meet filters.
Yeah.
And then realized a few minutes in, no, that's the real deal.
Costume.
That's a real hot dog costume. And I was very
There's
proud
something
of this
I love
person.
about remote work Halloween because it just like brings me back to when I was young and people would wear their costumes to the office and we would have like competitions of who could be funny and we would like dress up as each other and stuff, and it was like really fun and cute. And so like in our remote work, some people have dressed up and I have appreciated that. I like it.
Yes.
I prefer
and now
it.
I do feel guilty.
You should feel bad because now you're going to be looking back on this YouTube video one day and you're going to regret not having a funny hat on.
For the record, though, I did turn on one of the Google Meet filters. So it was a very remote work situation. And it was a cowboy who had a mustache that still wasn't as good as one of our other team members' mustaches right now.
Yeah. Some good mustaches lately.
So
mustaches are bad.
My virtual mustache was not as good. Okay, we're going to talk about something very spooky.
Spooky. Let's
really
do it.
Super scary.
And this is going to air like mid-November or something. So this will be a nice look back at Halloween.
It's always a little callback to what we were doing 2-ish weeks prior.
Mm-hmm.
Okay, so we talk a lot about different aspects of scalability. How does the advisor do stuff in a repeatable way? And we've been having lots of conversations recently in the context of succession planning and how all these things that tend to be in an advisor's head, how they actually are going to get that stuff out of their head and hand it to someone else to actually do. And it's really hard because there's nothing written down of, this is how this works. This connects to this. It's this, human intuition stuff. I get into the room with a prospect or client. I gather this information, the person says these things, I sort of get their vibe in the moment, and this is how I naturally deal with it and react to it and respond and say things back to them and make proposals and do all these different things. But again, how do you actually hand that back to a new team member? If you're trying to success out of the business or just scale, right? Like if you're the single point of every customer interaction, again, how do you kind of repeat that? So we want to talk about that in the context of investment management, but what did I miss there? How do we think about that? What are we talking about?
Yeah, I think it's a great place it's a great way to kick it off because we do talk to a lot of advisors who are kind of at a critical point in their journey where they're trying to decide if they should hire someone to kind of help free up their time, or if they should have bring in an additional advisor to try to run the same process that they're running, or if they should acquire a book, or like they're kind of in a pivot, like in a moment of trying to figure out what the next step is a lot of times. And I do think that this comes up a lot in that process of evaluation. And we just so happen to get to hear some of that feedback and hear some of the conversations that are happening internally in those moments with that advisor, because our tool is an option. If you find yourself at that point, it is an option to kind of free up the advisor's time and or kind of institutionalize what's already working so that other team members can be a part of it and free up that primary advisor. And I think there is a lot we see this a lot with firms that are already providing personalization or optionality to their clients or who perceive themselves as providing that. But one thing that I want to bring up early in the conversation is that even if you don't think you're doing personalization or personalized investing, you probably are. So like I think how we define personalization and optionality with advisors and their clients is a lot different than what the industry thinks of when they think about personalization. So I think it might be good to kind of start there and go through like all the different types of personalization that are probably already happening if you're doing investment management on behalf of your clients. What are those different things that you're already doing to personalize the experience and the portfolio for the client in front of you? Even if you're not doing like traditional like values-based investing or thematic or faith-based or other types of like categories of investing, I guess, that are laid out as options for your clients.
Yeah, I would say personalization is a spectrum. It's not sort of a binary concept. And that's exactly right. You continue to remind me, like everybody's already doing some version of it, right? It's not, you considering it, it's you're doing some version of it. So let's kind of like, what is at that other end of the spectrum? And by the way, this is going to be really hard for me because you're in
Are you not taking me seriously? Do you want me to take my cow
No.
ears off?
No, because it's good like mental gymnastics to like to simultaneously take you seriously, but also you have a cow hat on. So it's
I'm very serious. This is serious business
serious cow
for me. Serious cow.
the most
Yes.
serious cow. Okay, so maybe you answer that because what do we typically see before we think sort of deeper personalization and the experience, the personalized experience that can come with it as it relates to investing is what we think is important, what the end consumer wants. But before you even get there, you're already doing some amount of it. So you answer that question. Like what's V1 personalization that's already happening?
Yeah, I think around obviously asset allocation and how you are getting there. So, what data points you're bringing in and ingesting to then decide what the overall allocation is. That is like, I think, step one. And then step two that we see, at least most commonly that I see, is you have different types of models. Some difference in like you have a couple different types of models. Those may not be like values-based models and traditional models, but it could be that you have a more active strategy and then you have a more traditional like index-based strategy, or maybe you have a very basic ESG strategy, and then you have a more standard like typical run-of-the-mill set of models. And so you may have different flavors, but they're within 2 to 3 categories of types. And then you are doing something is causing you to choose one over the other. And that is, in fact, in my opinion, personalization, whether you're framing it that way or not.
Yeah, I think that's right. There's the sort of allocation level, and then there's the building block level. So like what are the inputs to determine in general what is the output for a household for individual accounts, and then what is sort of the vehicle to achieve those allocations, the sort of different product types and flavors, whatever that might look like. I also think it's important to call out, so that is inherently personalization. I think really good advisors, again, are capable of doing that input output in a kind of qualitative in their head way. They sort of vibe through it, but that's not necessarily a good thing, right? I think that's the other thing to point out. Like the problem isn't just how do I translate this to the next person. The problem is the reason it's not translatable is because it's not fully logical. It's not actually, there's not a this plus this equals this method to the madness. And so I think acknowledging that within firms sometimes is kind of the first step of, hey, I've been able to do this. I've been able to go into a discovery meeting, ask questions, maybe do a risk tolerance questionnaire, and then decide what I'm putting in that proposal. But if that is different for the Joneses relative to the Smiths just for qualitative reasons and not like pure rational reasons every time, then like that's the starting point to be thinking about. So before you even get to like, how do I go further on the spectrum of personalization and layer on top of that? What is the logic framework today?
I was just going to add to that. It's something that really helps me when talking about scalable personalization. And again, wherever you fall on the personalization spectrum at this point, how do we actually make it scalable? How do we make it repeatable? Something that really helps for me is thinking about like data versus like what we call framework and or process. So data and personalizing around data. So what are the actual data points that you're considering when making any of these decisions. So this could be their financial goals, their certain planning inputs, liquidity needs, risk tolerance, risk need, maybe preferences, maybe tax context or different things going on, tax preferences, maybe sensitivity to fees. Like, what are those things that you are ingesting, even if it's just by you talking to the person? What are those data points and why are you asking for them? Why are you gathering them? And then framework and process is how those are then used to then connect to the different things that you offer. So a great exercise, I think, for anybody, whether you're considering using something like Seeds or not, is to try to actually write that down and see if there is truly like a logic-based framework, and that maybe you don't have it written down, but maybe in your head you are in fact running a pretty tight framework that someone else could be trained in, or that a system could be trained in to help you scale up or not. But thinking about the data side of personalization and like the framework. So the data is really like the why. It defines and pushes the why, and then how it actually connects to the portfolio would be like the framework, and then the process that you're running is something that I think would be helpful for people to kind of think through this as we proceed through this conversation.
You just also made me think of sort of a tangent, but hopefully not too much, of the whole audit should be about, is this really about inputs to outputs? Meaning, is so like, I didn't even think of this part in going into this conversation, but is this baseline actually driven by client information, therefore equals this? Even if it's qualitative, is that the overarching framework? Or is it, I have a product shelf and I am going to consider when to share certain product stories? So the inverse. And we see this probably the most often, it drives you nuts, with alternatives.
Yeah.
In particular, I think that's always like the best example of where the framework is really about product in versus client inputs in. It's, we have this product, this alternative strategy, whatever. A lot of times you hear things like, we have access to it, we can get you in, ridiculous things like that.
Sales.
But that, sort of the sales framing. And so you're prioritizing like the product story. And again, I think what's important talking about the experience is like, you're better off not doing that and knowing, is there a logical place where this fits as an asset class? And even from a investor mindset perspective, is this something that they want to hear that's really appropriate for them? So I think that's really like V1 of this audit, is like, is your framework actually client inputs equal outputs rather than the other way around? Like, that's step one. Step two is then the stuff we covered a second ago.
Yeah, it's a good point. We always are going to probably bump up against like the sales version of being a wealth manager versus like the version that we consider to be kind of what should be the standard going forward into the future, which is more about actually just centering the client and asking the right questions and then delivering a proposal that is aligned with things that you heard and making very clear connection between those two things. So really making it about the client and not making it about what is available to you at that moment. But that does bring me to another piece of this puzzle, which is then once you have that framework and you have like, this is the data I capture and this is how those data points connect within my like logic framework or within my process to the right outputs, you have to have reasonable, good outputs to connect those data points to. So that goes into how do you structure your models or the models that you have available to you? How do you use them? And then how do you connect them to the data points how do you like in the experience make those connections in a simple way that is clear? I think I've said this on podcasts before, but I think clarity is like very underrated in this industry. I think there's a lot of like complexity and intentional complexity even. And then there's also a lot of people who don't know how to make something clear. And sometimes the reason you don't know how to make it clear is because there actually isn't a clear explanation. So there's nothing to make clear other than like, you should want this and telling a story.
It's such a good point. Like when you talk about the experience and the customer seeing value in it, it really comes down to two things. It's about you acknowledging and understanding their inputs, and it's then articulating it's then making clear how it connects from this to this. Like that, the psychology of that is so powerful, right? Like it is, I'm not presenting a solution. You and I have said this analogy on this podcast before, but I always think of it. It's like, imagine when you're walking into a doctor's office and as you're walking in their door, they hand you a prescription before they've asked you anything, done your blood work, done your family history. That's a weird, crazy feeling. But so the fact that just the experience of I'm getting this information and then I can articulate that this maps to this maps to this because of what I heard here, that should feel really good to the person, right? That's really that's the whole thing, right? Rather than telling that product story.
So I think, because I know we want to keep this discussion a little shorter because this could get really out of control. But I think if you take it from there, one other thing that I wanted to bring up is, so there's the inputs, like the basic discovery. What are you collecting? How does that tie to very specific outputs? How do you then craft the experience around explaining those outputs? And there are different things we could talk about there in terms of different types of clients and what different types of clients are looking for in the depth of your explanation of those connections between those two things. And that's all really great. But something that's not talked about enough, and it is tied to personalization, is how to discuss trade-offs and ongoing management with the client. And the reason that I want to bring that up here is because I think that a lot of times advisors feel like they have to come in with the right answer, with the perfect answer in the proposal meeting. So it's like, I did this discovery. I now know what's best. This is what is best. See, I listened. Here it is. But it's typically not that simple. The core portfolio might be correct and maybe very, very valid, but there's still so much more you can do to show your value in that conversation by surfacing things that they wouldn't have thought of that are maybe trade-offs. And maybe you already know what you'd recommend based on your conversation or based on the discovery you've done. But even surfacing that and having and allowing them to engage in understanding and doing a little bit of education around the trade-offs is so important. And this can be about preferences. This could be like tracking error versus incorporating preferences. This could be tax sensitivity versus allocation and getting to target. This could be unwinding legacy holdings or maintaining them and having the concentration risk. Whatever those things are, that's really where, because there's so many advisors who are struggling with closing the business. And I think that it's because it's seen as a one-time thing. We did an evaluation. This is what you should do. You should now pay us 1% to manage it. What is managing it? What does that mean? What are you going to help me with? What trade-offs are we balancing as we move forward together? You can do all of that in that personalized, meaningful proposal conversation by showing them that this isn't as simple as just slapping a couple models together and hitting go. There is a lot more that we're going to be doing over the next couple years as you move toward your goals, right? So I just want to surface that because it is in the experience personalization category, but it's very much tied into the operational levers that you can pull, how your models are created, what you have available to you behind the scenes, what you can scalably support operationally, and how you talk about those things and position those things so that they aren't just you pushing and selling like tax loss harvesting or pushing and selling a tax transition, but you're actually building the value and showing them your value while you pitch. I don't want to say pitch, while you have the conversation.
Yeah, there should be logical connect, right? Unless you have this logical connection, there's no way to then have those trade-off discussions. It's all squishy. So think of, even to call out direct indexing, which is part of Seed's kind of core offering and what's available as a building block in an investment output. So use that as an example, kind of back to my point on the alternatives example, but even direct indexing as a product solution. There's a lot of advisors where it's just tax alpha. And then you get a pitch deck and you just go tell that story to any client, right? It's not input output. It's, I already have the output and now I'm smashing it into whatever account I can smash it into. There are trade-offs inherently in using direct indexing. There's costs associated with it that may be different than a cheap ETF position. There's tracking error trade-offs. So if you think of the decision tree, there is a logical reason where it could be used. Taxable money, higher tax bracket, maybe trying to unwind legacy positions is a component of using it. But even if you check those values preferences where someone has strong motivation around values alignment and really wants to actually not own every company and every freaking index, because wow, you could do that if you want to do that. But there's still then a trade-off discussion. So use that example, someone who's highly motivated by values alignment. You should be able to know that, map to that outcome in some aspect of their equities exposure. But then there should be a discussion about, okay, what does that mean? You're going to invest in this way. You could have tracking error, and there's a better way of what to call that, depending on what type of, even that's an example of like, what type of client are you calling it tracking error to? And how are you explaining what that is to someone who's maybe not so familiar with a concept like that, right? And so there's just so much there. So unless you have a framework, a starting point, something that can get you 80% of the way there to then get to these discussions, it's really, really, really hard. Let's go into this fake real life example to just kind of talk through to hopefully bring some of this stuff to life for people. And then then we have to go trick or treating. So I did a webinar a few months ago, and we used this sort of fake real life example of an end client and what information a advisor might gather in sort of the discovery process related to how they're going to invest their money. And it's just interesting to talk through, like, again, going back to what we were just saying at the beginning, what are those things? And, seeing this spectrum of personalization from zero information or maybe just a risk tolerance number to like, what are all the things I could know about an investor and where people are typically and where you could ultimately be. So I'm just going to read off this person's sort of biography here. Sandra, her name's Sandra. It's a great name. Sandra is 50 years old. She has some short-term cash needs, and she's thinking about early retirement. She'd prefer to try to retire early. High income right now. She's in the highest tax bracket. And of course, she's lucky enough to be in a high income tax state. So that's kind of fundamental goals information and tax situation. Right? Like just kind of scratching. I mean, it's really fundamental stuff. I guess also a moment to point out, there's still, unfortunately, a lot of situations where we're building portfolios based on tolerance inputs as opposed to actual goals information. Whole episode, we can talk about that. But think about that as the basic goals inputs, tax inputs. Then we get into some of the risk stuff. So despite her need to continue taking some risk in her portfolio to reach her objective of early retirement, she's very concerned about market volatility. In fact, she's kept some money in cash as a result. Devastating. Okay, so now we have goals inputs, we have some level of risk tolerance understanding, and some like practical aspects of that. She's got money sitting in cash because she's had these concerns about market volatility. So already that's so much information. Like what you need to do just with that information, that again, so often advisors are maybe qualitatively gleaning through conversation and then translating in their brains how they're going to do something about that in the portfolio and how they talk about it. I think that's a fair place to kind of draw a line of like the majority of personalization, more or less around investment management, tends to end about there, right? There's more that goes into those buckets, but that's kind of like the typical average threshold.
Yeah,
fair
I
to
would
say?
agree.
How dare you agree?
I agree, although I will say there are a lot of firms that then might just like tag on a question at the end, like, are you interested in incorporating your values? Like something like that. Or,
Yeah.
oh, like I have this, like, are you interested in like beating the market? Like, are you interested in me telling you? Like, I feel like there are firms that are actually just straight up asking like an overarching preference question. And I'm saying this because I know kind of where you're going. But I think, yes, for the most part, everything you covered, although some firms are just doing basically tolerance and like mapping, to a set of models. But for the most part, if you're doing all that, you may also, if you're doing some other type of personalization, you may just be straight up asking, I do these different types of investing. What sounds best to you? Like, so that you know going into the meeting if you're kind of on the right track. So I just want to call that out because I think that is another place where you just kind of decrease the value because instead of doing discovery, you're just kind of laying out options and they're kind of looking at you like, well, you're the expert. Why are you? I don't know the difference. I don't understand the trade-offs. I don't know what you're talking about.
I remember
what I mean?
having a conversation recently, and that like menu experience is a nightmare, right? Like putting up, we have strawberry and we have cherry, and the client's like, huh? Like I don't know what is right for me. How should I think about those two choices? I think I like them both. So what should I have? Okay. The next sort of dimension of this that I think is probably most ironically often missed, or is again qualitatively understood, there's no sort of framework to capturing this and then doing something about it, is just like baseline, how does this human person think about investing? And I mean from how much they understand it, how much they're interested in it, how much If there is interest, what does that mean to them? Have they done it before? What has the experience previously been that they've been a part of, either with previous advisors or on their own? How do they think about all of these things? We weirdly tend to steamroll past that because it's like, again, God forbid I figure it out. What am I going to do with that information and shape stuff moving forward as a result? And it's funny, like I'll hear in response to that sometimes like, well, we do our compliance KYC form. So we know like how much, how well they claim to know XYZ or whatever about stocks and bonds and in between. But that's not what I really mean. Like what does this mean to them? Are they interested in the process? How involved do they want to be or not, et cetera?
Yeah. Is it like, I want to learn about this. I want to be in the details. I like talking about it. I'm curious about it. I like understanding markets and I like understanding how my portfolio moves in relation to, like, is that interesting? And is that an area where you could provide value through education and by getting into the weeds with them? Or is this more the type of person who's like, I am wanting to pay you to take this off my plate so I don't ever have to worry about that. And I can really just feel good about this and feel confident about this, or somewhere in between. We have heard of many people who have certain curiosities or much more narrow interests as it relates to investing where they would like to be educated or go deep or understand the trade-offs, but overall they want it to be just outsourced. And then there's people who want to be like in the weeds and they're like looking at trades. You know what I mean? Those are different people and should be treated differently. And the reason you're asking this is not always just to build the portfolio properly. It's to know if you can serve them and to set expectations and to actually just hear them out and make sure you guys are aligned at the top of the relationship.
Again, something we've talked a lot about, but it is the moment, it is the opportunity to establish trust and alignment on what the value actually is. That's it. Like if you can't do that at the beginning with a framework, then, and we've, had this similar conversation probably on episodes before of, you may win, quote unquote, win the business, but it's bubbling under the surface forever, right? And maybe they stay for a year or 3 years or 5 years or 10 years, but there's something under the surface in how you're talking about the investments moving forward because you didn't get that understanding at the beginning. The last components, I'll just read the rest of this about Sandra here and we can talk through it quick. So Sandra doesn't want too much detail about the portfolio. However, she's fairly interested in emerging investing trends, specifically AI and crypto. I think in our example, she happened to be employed sort of in a tangential part of the market and was interested in those areas. She's somewhat motivated by values alignment, but she really just wants to exclude big tobacco and prison companies from her portfolio. So someone who's not, and this kind of goes back to even to like the direct indexing point, someone who's not massively motivated by, constraints from a values alignment perspective, that's sort of like a proxy you could think of for how much really makes sense to deviate from an asset class exposure. In this case, not a ton, right? There's a couple, out of the S&P 500, she may be excluding, in this example, I don't know, five core holdings, so there's that. Then think of all these branches of the decision tree that then goes into that trade-off discussion, but that gets you to that moment to have that discussion. What else? So again, those are, I would say, on the other side of the typical dividing line, when you really start to talk more about personalization, what can come into the conversation.
Yeah. And I think that this is the biggest opportunity I think that advisors who are working with us have, is to, in a scalable way, get very granular and very personalized without, and being able to understand the trade-off of doing so and have that conversation with the client. I think one of the biggest reasons that advisors that I really believe are like the future of the industry aren't having conversations like this is the operational burden and like the understanding of they themselves understanding and being able to calculate the trade-off so that they feel confident discussing it with the client. But I do think this is where the industry is going, is to be so much more granular about what matters and what doesn't, and actually providing expertise around the trade-offs. And those things can persist, those conversations persist over time because your interests, values, curiosities, those things change over time. And so being a firm that's not rigidly stuck in a core set of models, but is able to react to the person in front of you and then maintain that experience over time as their own life changes and their own beliefs change and values, and they may suddenly not care about, they may care more about tracking close to the benchmark next year. They may not want to exclude big tobacco at that point, or maybe they want to exclude more things. Maybe they're suddenly upset about something else like animal rights and they want to go that direction. Like just being flexible in how your models are configured, what options you have available to you, and then how you can lay things on top of or add little sleeves of exposure in, I think is where, and managing those trade-offs and clearly communicating those trade-offs is really where like the future of like, why would you work with an advisor is. Because if you're not doing any of those personalization things, then, what are you talking about over time? And that includes like tax transition, not just like preference-based, but like transitions, concentrated position, everything that is ongoing is where the value lies, at least for me. I think, because you're really that whole beginning, that whole thing you just described, all of those preferences, inputs, outputs, framework, process, all of that is in service of the long-term relationship and making sure you're getting it right at the beginning. Expectations are clear at the beginning. They're buying into your way of doing things. And then you're able to kind of continue throughout time to provide value so that they know what they're paying for when they pay you 1%.
You also made a point in there about the other dot needs to be connected, which is the actual implementation. And that's, if you think of, we talk a lot about why this doesn't happen more consistently. It's what is the framework of information to gather? What we just talked about today of then how do I take that information and map it to an outcome that makes sense for the client so that I can get to a point of discussing trade-offs. But then how do I make it happen in my client's account? And how do I make sure that I can do that over and over and over again and have a next advisor plug into that system across all those steps? That deep discovery moment, logically discuss what the outputs are, make sure that it actually happens for that client in a systematic way. So there's a lot there, right? And I think are the hurdles that have held advisors back. So again, I think, by the way, before I forget, did you bring up animal rights because subconsciously
I am really hoping more people, yes, exactly. As a cow today, yeah. I was really trying to make sure people were bought in on that. And people should be thinking about it and surfacing it to their clients.
Okay, what else? Did we miss anything before we go trick-or-treating?
I mean, there's just so much there. People are probably thinking, okay, so what happens to Sandra? What specifically, how would you do that?
They need to call us.
That is a big question.
We can do a demo for you. People. Yes.
Yeah,
we
can
do
a demo. Yeah, it's hard to talk through on a podcast, but we can show you.
I will say, let's put it this way. Do you think Sandra prefers that another human person understands those things and is translating them? Do you think that that's what she would want relative to an experience that doesn't deliver on that? That's the takeaway to really think about.
You just mean like the human versus AI thing, like robo. Yeah.
If we're not doing it, who/what is? Sandra wants that. Any human person, that's the preference from an experience standpoint.
But just to be clear, because we get a lot of people who then just immediately think, I don't have a Sandra. I don't have someone who cares about big tobacco or who cares about AI or whatever. They think that immediately. That's what we hear all the time. And so the broader point of all of this is that you shouldn't have to judge a book by its cover. You shouldn't have to like pre-qualify people or sell hard to people based on how you do models and what you believe about how preferences should or should not be incorporated. That's kind of the overarching point. If Sandra didn't care about any of that and all she was seeking was returns, you should also have an option for that. Like that's the point, is this isn't just about the real preference heavy people who want to kind of get into like things they care about and things they value or things they're interested in. This is just about everyone and about having the operational chops and like the actual right levers to pull to be able to serve whichever client is in front of you based on what they tell you and what you gather from them. So taking your expertise along with your operational like backing and all of the right model levers, preference levers, so that you can serve the person in front of you and you can have a human conversation with them. Is that it? Not a cow. With a person. I'm taking this off. I've been wanting to take it off this whole conversation.
I'm so excited for the clips.
I can't believe I wore this the whole time.
It's great. Happy Halloween, everybody.
Happy Halloween.